I'm Sanford Spivey. I work here at 25madison. I run our Evolve studio. What that is we incubate venture scale businesses in overlooked software markets. So where we spend a lot of our time are in archaic markets where there's a lot of overlooked customer sets, unique data sets, and sort of manual and workflow process that exists. And we find great founders that come in, co-incubate businesses with us and sort of scale them quickly. And so we're a team of a bunch of venture builders, designers, product, AI engineers that help with that process.
Hi, I'm Jaja Liao. I also work at 25madison and I run our external investments. So apart from the incubation studio that Sanford works out of, we also have an investing arm as a separate vehicle, and we invest in pre-seed and seed companies across B2B SaaS, in categories like fintech, healthcare, and supply chain. 25madison started 5 years ago, initially as a venture studio. And so we were incubating companies from the ground up across categories like healthcare, AI, which Sanford leads, and also supply chain. And what we realized in 2022 was that as our companies started to grow up and raise seed, Series A, Series B, et cetera, we wanted to do two things. We wanted to, number one, double down on winners that we incubated out of the studio. And number two, we wanted to just invest in net new companies that we were seeing on the market that we liked. So that's why we started a fund a few years later on. And today we essentially have both a studio that's actively incubating and also a fund that primarily funds external investments.
I'd also say one of the things we found was this sort of blend of typical private equity and early stage venture builders. And so we've constructed a lot of our LP base, and then the combination of the incubation teams as well as the investing teams that have this mix of those two. And so we found that archaic markets, interesting LP bases that have private equity investments has sort of created this interesting distribution advantage that we have as both a platform on the investing side, but also in the incubation side, as well as differentiation to go out to founders who are really intrigued by those end markets in general.
Our entire thesis as both a studio and a fund is to help our startups find their first enterprise customer via either one of our P partners or one of our P partners' portfolio companies.
So on the incubation side, one of the things that we look for is kind of three areas. One is massive, overlooked, archaic markets. Oftentimes you can think about manufacturing, trades businesses, franchising businesses, accounting businesses, areas where there's a lot of human labor, services-oriented businesses that we think can be either automated or semi-automated with AI today. The second is PE investment density. So a large part of our thesis is we can sort of access these end markets through these distribution angles via the portcos of the PE funds that are invested in our vehicles, but also partners of ours. And then the third is really focused on finding that interesting founder combination that has both product orientation as well as interested in deploying AI into these end markets with unique data sets. And so we oftentimes are really looking at that intersection and where there's less competition as well.
On the ventures fund side of things, it's a little bit different from where Sanford is incubating. So we're a bit more generalist, and we essentially can be thought about as a plain vanilla VC fund. We're writing checks of about $1 million on average, but we can range from $500K all the way up to $2 million. And we're investing in primarily B2B SaaS companies across healthcare, supply chain, fintech, and in general in sectors where we think there's a lot of PE activity, because we also want to be able to have a lot of value add after we invest. And so post-investment, our hope is that we will be able to broker synergies across our startups and also across our P portfolio partners and see if there's a match that we can be made to help our companies go to market much faster. A company that we invested in out of the ventures fund is called Paxton, Paxton.ai. What Paxton does is that it helps small and medium-sized law firms have a legal assistant that helps with contract management, legal research, and more. We invested in this company because we were really impressed by the founding team. They were two serial operators and entrepreneurs, and they had this really unique wedge into why they think that small and medium-sized law firms needed something very different from enterprise and large law firms and general counsels. We invested in this company when they were a pre-seed company. They had basically partially an MVP build. It was very early, but we wanted to make a huge team bet in a huge space. And when the company launched, they immediately went from 0 to almost 2 million ARR in a matter of months, which just comes to show how their product really resonated with this SMB law firm market. And since then, the companies continue to do well. They've raised a seed, they raised a Series A shortly after, and they're just in the very early innings of taking over the legal tech space.
A business we incubated called Rebuild. One of the ones, it was actually our first one coming out of the studio, which was really cool. And so it was very emblematic of this sort of strategy and thesis of our model. So we got introduced to a PE firm. They introduced us to a home restoration company. So these are estimators that go out to your home if your basement floods, and they literally use pen and paper today to actually document the process of understanding the price to restore your home. And so one of the teammates that we had in the studio went onto a job site, identified this really big pain point in this problem, and we started to unpack it and found that there's really this $300 billion a year problem within restoration in terms of all the changes in climate and what's happening in the world. And so from really idea to first revenue, it took us about 9 months, which is super fast. And that individual actually ended up spinning out with the business and running it. And they've subsequently gone and raised a $2 million pre-seed. And so we really loved this business because it was super emblematic of the PE connectivity as distribution, also the ability to find a really narrow wedge in an archaic market, and then service the right level of, I would say, advisor group as well as industry expertise in a category which has largely been overlooked.
I think for me, the number one thing I like to see in founders is somebody who can answer a question of why me. And that can come in a wide variety of ways. It can be like, I was working at a company where I was tasked with XYZ, and my day-to-day job was just so frustrating and so tiresome that I wanted to go out and solve this problem. It could also be, for example, I come from 10 plus years into this specific industry, and I'm a total industry expert, and I know everything about the space. I know all the relevant people that I need to work with to make this a huge success. And so for me, if you can answer that question, I think that's a really, really valuable trait that I think can't be overlooked.
Yeah. I think there's three qualities I look for in a 25madison incubation founder and a general investment. One is just immense ability to storytell. And I mean that by how do you talk to a customer? How do you recruit someone? How do you sell a vision that doesn't exist at this earliest of stages? And so that storytelling and the desire to storytell to a customer, to sell to a customer, the ability to do that, I think is one huge quality. I think the second thing I look for is velocity of both learning and execution. And so these are all in the small things. How fast do you respond to an email? How do you follow up with a customer? How thorough are you? How hard do you recruit that world-class technical lead, that world-class salesperson? So a lot of the time is that ability to, the velocity of execution and learning around those elements. And then three, I think I always obsess over product-oriented founders, people that want to spend a disproportionate amount of time with customers and product and understanding their feature, their roadmap, the capabilities that they're actually mapping sort of value to pricing, and is there a real market, and can they find product market fit? Because that takes a long time. It can be a long slug to get there.
And one last thing, I think, across both the studio and the fund that we care a lot about is just resilience, in that startups are hard. It's a long journey, and ultimately you just gotta stick with it as long as you can. And so that is definitely a common trait that we've seen across both studio and fund. And it's, I think, what really makes or breaks companies long term.